Well, we have quite a number of stories in the news this morning. It looks like a very busy day for everyone. So let's Moody's new report about Nigeria's banking sector and economic outlook for 2019 and 2020. We told you about that already. And of course, as we speak, the Nigerian National Office on Trade Negotiations, NOTN, is holding meetings with regional stakeholders when it comes to EFCFTA and what you call the tariffs and all of that around trading in goods across the West Africa corridor. That is taking place as we speak. And also Moody's holding Nigeria's annual economic summit right now, also in Lagos. So quite a very busy day here. Meantime, the Lagos Commodity Exchange says it has received, of course you hear that already if you're in the news, the SEC has given approval, a final approval and certification and licensing for the first commodity exchange to be operated in Nigeria. Of course, you know that the Nigerian Stock Exchange has a bit of his fingers in that pie. We'll bring you up to speed on that in the days ahead. Meantime, let's check in with the fixed income space. And that's where Choma Udu, who is one of the FI, or fixed income dealers at GT Bank, is joining us this morning from FMDQ Exchange Place. Okay, Choma, it's good to have you on the show.
Thank you for having me, Boston. Good morning.
Great to be here. I'm interested in the yield curve and this looking like a single yield. I love it when it's single yield. I'm not too sure if other folks like it, but I like it.
We're not yet at the single yield like you like it. We're currently at double digits. On the short end of the curve, yeah, the last auction we had on the PMA, rates actually ticked up by 3 basis points to 12.34. However, there's a PMA today, 17 billion on offer, which is not as much volume as we wanted because the market is currently liquid over 200 billion. We expect some moderation across the 3 tenors on the rates because we're going to see a surge as people try to grab those assets. We have a maturity for home auctions tomorrow, so we have about 89 billion coming into the system, and we expect that the CBN will come and mop up the liquidity in the system to try and hold the rates at double digits.
Well, what's the big news on the fixed income for bills and bonds for this week? What was the big story? Next week is the debt management officer June auction. But was any big news this week? Anything you folks are looking at, either from the micro or the micro space?
The big news really is everybody's waiting to see the outcome of today's auction. It will help give us some sense of direction as per yield, and then if there's an home auction tomorrow, we'll be able to actually find the path of direction. However, we expect a bond auction next week because about 336 billion is going to mature, which is bonds maturity and coupon payment is going to come into the system, and we are going to see a lot of liquidity. And for the central bank, we hope that they will come in to help us manage the liquidity influx from next week.
I hardly ask for professional advice, but I'm going to do that this morning. So if I'm interested in bills and bonds, how would you tell me to play it at the moment? Short end, medium term, the long end of the curve?
Boston, I don't know what your asset is or your portfolio is biased is, but if you have to try, when you want to play in fixed income space, you will try to match your maturities to your spendings correctly. So if you have demand or you need funds, you need to do some fundings in the short term, then you play at the shorter end of the curve so that your funds mature as you need it. And then if you have funds that you don't really need, and then depending on your portfolio and your portfolio arrangement, then you can play at the long end of the curve, which is the bond space.
Choma, I need every penny I can get right now. If you just pat me down and try to find out any money, there's no spare money. But I'll do something. Everyone listening out there, thank you very much for that. Thank you so much, everyone. Choma Udu, thank you so much, from GT Bank out of FMDQ Exchange Place. So let's just take a flight. Doesn't take so long, does it? Let's stop over in London with Simon Pusey, who is one of our team members at the Cavendish Square studios, where Channels Television London Studios is based. So let's talk to Simon for a few seconds about the early trade, the UK markets on both equity and the currency side. Simon, join the conversation here this morning. Bring us up to speed. Spice it up for me with what's happening at the global marketplace.
Yeah, morning, Burson. Markets down across the board today, not just in the UK, but across Europe. The FTSE all-share down 0.32%, the FTSE 100 down 0.31%, and the FTSE 250 is minus 0.28%. So shares all slightly down, but hopes of US interest rate cuts in the coming months are supporting shares, even though some investors are also nervous about the health of the global economy. Traders here were also encouraged by the news today that the United States and China will revive trade war talks soon, and that President Trump and Xi could meet at the G20 summit later this month, so there could be some movement there on trade. Speaking of a rate cut, all eyes here will be on the Federal Reserve today and headlines from its latest policy meeting. I'm sure you've been talking about that in your show. Most analysts expecting it to leave short-term interest rates unchanged, but investors increasingly expect the central bank to cut its benchmark rate later this year for the first time since 2008. Most interesting today so far is the release of UK inflation data. Britain's inflation rate has fallen, bringing some relief to households and ordinary people. The Consumer Prices Index rose by 2% in the last year to May, the Office for National Statistics reports. That's down from 2.1% in April and back to the Bank of England's target for inflation. This means wages are continuing to grow faster than prices, as average earnings grew by 3.4% in the last year. So good news for consumers and ordinary people spending money.
Yes, for those of you in the news circuit, I think the central bank decisions this week, as you touched on earlier, were very key. The Bank of Japan, the US Fed, that's the FOMC. You look at the Bank of England tomorrow, Thursday, June the 20th as well, joining the raft of central bankers speaking, deciding on rate direction.
Yeah, absolutely, and we'll have obviously more news on that in the coming days. Two big bits of company news for you today from the UK. Premier Inn owner Whitbread plc said continued weakness in the UK has hampered sales in the first quarter of its financial year. UK like-for-like sales in the first quarter of Whitbread's year ending February 2020 fell 3.7%, with accommodation falling 4.6%. Total group sales falling by 0.5% on the year before. Shares were down 1.1% in that company in early trading here in London today. And shares also in holidays and insurance group Saga have hit a record low today after it was warned that its business is still suffering from Brexit uncertainty. Saga, which targets over 50s and holidays for over 50s, has told investors that it is facing challenging headwinds in both travel and insurance. Tour revenue has fallen this year, suggesting some holiday makers are nervous about making plans, pushing prices down across the sector. Saga's shares are certainly being discounted, down 10% this morning to just 34 pence. That's down from around 100 pence at the start of 2019. And we'll have all the latest on equities and currencies this afternoon with our live cross then.
Well, Simon, Mulberry is also in the news about the luxury companies, also in the news, corporate news this morning. I'm sure all of this will continue to expand as we get into lunchtime when you sit down with Chimeze Obiwago for our afternoon business show. Thank you so much, Simon, and well done to all of you out of our London studios. And out of the headquarters studios here in Lagos, Nigeria's financial capital. Thank you for watching, and I'll see you tomorrow.